comes in 1120S, and it goes to, as a K1 to your owners. Actually, I should make it plural in case. If it's you, it's just going to go to your owner's return. Same thing. This is a 1065. Via a K1 goes to partners return. It does not pay tax. These are informational only returns. We're just saying to the IRS, here's how much we made, here's the net income, and here's where it goes. A corporation does an 1120, and it pays tax at 21%, flat. If it pays you, it's either going to be wages, or if it's paying you profit, it's going to be dividends, which are 0, 15, or 20%. And a sole proprietorship is just you, your Schedule C of your 1040. And then an LLC, any of the above, right? 1120, 1120S, it could be a 1065, it could be ignored. The LLC, like you literally could have 20 properties and not have a single tax return other than your personal return. There's people that do that. We don't advise it. But if you're not interested in ever getting any loans or anything like that, you could set it up to where you have 0 tax returns. If you're one of those people that just says, you know what, I just want one return, I want to keep it super simple, I'm never going to borrow money, I buy everything cash, yeah, you could probably do it. Just know what you're giving up. If you're going to be selling any of those properties, you might want to have that 1065 because you want to have that separate tax return. Clint kind of gave you the scenario, but we've had a lot of folks, especially in the non-residential area and commercial, where they can't sell the property because the underwriter on the other side can't underwrite the loan because there's no tax return for that. It's on their personal return and they can't separate it out. All right, so let's go through this. So what are the major benefits? Let me go through this. Don't worry, you guys, we'll get this. Oh, by the way, we're giving you the recording if you purchase the package. You're going to get the recording if you purchase the package, period. If you're Platinum, you're going to get the last 3 recordings of the last 3 events. And I like to twist around, so sometimes I focus in on areas that you guys are zeroing in on. So sometimes there's a little different flavor. Clint does a lot of great stuff, depending on what's coming in. So yes, you could watch 3 different events and get 3 different flavors. Let's go through this. Major benefits of a land trust is a land trust has a grantor, it has a trustee, and it has a beneficiary. This trustee can be a third party, including an LLC. So the major benefits of a land trust is you can have anonymous ownership. So when the land trust really came out of the Sears Tower, the Illinois trust, it's an act. It's actually one of the few states that has land trust statutes. Otherwise, you're just using common law trust statutes. But it was like basically, hey, you could hold title as a trustee. That's the name that goes on in the public record. So I could just sit there and have my name listed on all of, like Clint's name. He's going to be the trustee on a bunch of your guys' documents. I know that because I see it all the time. You could have Clint's name on it. It doesn't point to you at all. We could take the beneficial interest and we could transfer that to a partnership. And then it would go onto that partnership's tax return here. I'll make it even easier. It'll go right here. So the beneficiary, we just assign that right over here, and voila, it's no longer on your return. Your name's not on it. For a personal residence, this is actually kind of nice. We have some clients that you'd actually recognize the names of. They don't want their stuff out there. They come to us because we're really good about creating anonymous ownership. And just for kicks, if you don't believe me, I go by A.T. Mathis, and you could just go into the Nevada database and look at officers and directors, and you'd probably find 20,000 companies at any given time with my name on it. Good luck finding out who the owner is unless you actually are dealing with that company. We're not hiding anything. The banks have to know who the owners are. This isn't anything where you're going to allow terrorists or money laundering. No, because you have Bank Secrecy Act. Banks have to know who you are to open up a bank account, and they see I'm a nominee, and they go to see who the actual owner is, but it's not a public record. If that company hurts you, you could discover it only if you meet a basic threshold. You can't just do it because you want to know who they are. You actually have to show good faith that you actually have a claim against them, and then potentially you could discover the owners. Usually it's going to be in supplemental proceedings. It's actually pretty tough. Sole proprietorship, the only major benefit is it's simple, but it comes with red flags. High audit risk. And more tax. So what I would say, here I'll go through best use of all these. I might just do that right now. If I'm a sole proprietor, it's for new ventures that may or may not start out and do anything, like if I'm just going to be spending money, or less than $30,000 a year. And I'll show you why. At $25,000 a year of net profit, it's about $1,500 a year savings to go to an escort. So I say like it's worth it, but it's not like it's right there on that line. I could save an extra $1,500 a year, and I'll show you some of that math later on. Land trust, best use is always going to be real estate and homes. And by the way, you can actually own your house in a land trust and assign it to an LLC, and it does not remove your capital gain exclusion, the 121 exclusion. It does not cost you your homestead, although if you're in Texas or Florida, talk to us first, because Texas is the one state where we've got to be real careful. We don't want to look, because it's an unlimited homestead. So we're just using it for anonymity. You're going to be fine. People are going to ask, well, what about a living trust? A land trust and a living trust, same type of trust. They're called a grantor trust. The living trust, we just make sure it keeps living on after you're gone, and it distributes all of your assets, whereas a land trust is just a grantor trust created for a single property, and we assign the beneficial interest. Living trust, you never assign the beneficial interest. But from a tax standpoint and asset protection standpoint, same thing. Same thing. There's no real benefit asset protection-wise from a living trust until somebody passes away. Then it becomes irrevocable. Otherwise, the living trust has nothing to do with asset protection. It has everything to do with creating a legacy. All right, partnership. Major benefits, separate tax return. It does a 1065. You can have non-pro rata distributions. So I could, depending on what the scenario is, with real estate, I may be doing a whole bunch of work, and I may say, hey, I get a preferred interest. I'm getting 10% off the top before anybody else, before we split anything else. Or I want a guaranteed payment as a partner. Or, hey, I want a disproportionate amount of the losses attributed to me in the first few years. Like, hey, I'm putting in a bunch of cash, and I really want the losses more, so I want 100% of the losses. You can actually do that with the partnership. It's very flexible, and its best use is for real estate. I wouldn't be running a business out of a partnership. I would be running a business out of an S corp. The other best use for partnerships is if you have a trading account. And the reason being is because in 2017, under the Tax Cut and Jobs Act, it did away with something called miscellaneous itemized deductions, which is where you would write off your expenses attributed to trading. So if we just have an LLC taxed as a disregarded entity that you just own it, or a husband and wife owning an LLC, you don't get the tax benefits. You wouldn't be able to write anything off. So if I had expenses associated, I would lose them unless I'm not a trader anymore. My trading becomes my primary source of income, and I'm doing over 700 trades a year, and I'm trading more than, I think it's 170 days that I'm trading, and I would qualify as a trader. Then I could write off my ordinary necessary business expenses. I could make a mark-to-market election, actually write off my losses, but you're going to get audited all the time, because there's nothing actually called a trader in the tax code. It's something somebody made up, and they just kind of write on their return. So I tend not to do that. If I'm a trader, I'm going to go the least resistance path. I'm going to have a guaranteed payment, usually to a corporation. It's probably going to be a part owner, 20% owner or something, and I'll have all the expenses run out of the C Corp. C Corps are awesome because they have that 21% flat tax, but also you can write off 100% of your medical, dental, and vision expenses. And I didn't misstate that. You that are husband and wife or person and partner or whatever it is, if you are in a small relationship, so it's a partnership or it's a marriage, you can do this without any hesitation as long as you don't have any other employees. If you are with other people, like your partners with other folks, and you have employees, and it's more than two, and it's like let's say you have 5 employees, we have to worry about discrimination. So we can't just give out the medical and dental benefits just to the executives. We've got to be careful. We've got to make sure it's going to everybody. So it's really easy if it's a closely held corporation. Again, husband and wife sitting there, and you're covering all your expenses. It also allows you to reimburse 100% for your dependents. So if you have a child that has lots of medical expenses, I have clients that have $20,000, $30,000 a year for special needs kids. Perfect. And they have a lot of medical bills, and they have a lot of expenses that they're having to, or they're having to pay somebody to care for them. Perfect. This allows it to be 100% reimbursed. And it's a great, great benefit. What's the downside? Double tax. We have to be aware of it. If you're in the highest bracket, it's really hard for that to be used against you, because when you do the math, 20% and 37%, or let's say you had 21% plus you had 20% on the distribution, because you have long-term capital gains, it's around 36%. When you add the net investment income tax, it could pump us up to right around 38, 39%, but it's not earth-shattering. It's really cool. C Corporation's best use is usually as a management company. In other words, I'm paying it and I control how much money goes into it. So I don't want to get into it. I see some of you guys said, what about the traders? Go to my YouTube channel and take a look at the stock videos on traders. We have a whole bunch of them, and I lay it out very, very clearly there. I'm not going to go over it today because we're really focusing on real estate. Major benefits for S Corporation is avoiding FICA. When you have an S Corporation and you distribute money, let's say I make $100,000 and I want $100,000, you can take your money out at any time. There's no tax for taking the money out of the S Corp because it flows to the owner's returns. Remember, it does not pay tax. It flows to the owner's return. Same thing with that partnership. I can take money out. If I need the money, I can always take out what I put in. If it's profitable, I can always take out the profit. If I'm at risk, I can even borrow against an asset and take all that out. At risk means that you're on the hook for a loan. So if you have a piece of real estate that's worth $1 million, and I borrow $1 million out and use that real estate as collateral, I can take the $1 million out so long as I'm at risk on that loan in a partnership. S Corp's a little different. Let's say I make $100,000 in an S Corp. I can quite literally take 70,000 of that 100 and have no FICA, so long as I pay about 30,000 as salary. That's why people use S corporations, including our president. That's what he does. Like, there was a newspaper article saying, oh, you're talking about paying the taxes. Then you avoided, forget how many, it was tens of thousands of dollars that he avoided because he used an S corp. Past president Trump used S corps all the time. It's because that money comes out and it's not subject to old age, disability survivors, and Medicare. For people that are wealthy, it saves you at least 3%. It's 2.9%, period, on every dollar. So people use S corporations for that reason. The downside is it does have to be pro rata distribution. So if you're 50-50 owner, you both have to get half the profit. Best use is usually for professional businesses. It used to be that there was a surcharge if you were a doctor, a lawyer, engineer, veterinarian, dentist, things like that. They hit you at a higher bracket if you're a C Corp. But we use it for professional businesses and active businesses in which you materially participate, because we want to make sure that you don't get hit with extra FICA. And by the way, if I have capital gains in an S Corp, it still flows down to me as capital gains. It doesn't ruin it. It's just I have to be very cognizant of when I make money, if I'm making money actively. LLC, this is a Swiss Army knife. I can make it be just about anything. The LLC is so versatile. I can make it an LLC that's owned by a land trust. Like, just think about this. The LLC could own the beneficial interest. The LLC could be owned by a partnership. The LLC could be a partnership. The LLC could be a C Corp. The LLC could be an S Corp. I get to pick it. It's a Swiss Army knife, and its best use. We love it for real estate. We love it for holding assets. And here's how I'm going to explain it. Here's my little coffee cup. There's coffee in it. If I didn't have this cup and I had to hold the coffee in my hands, I'd get it everywhere. So if I hold real estate, that's a big liability. That real estate could get all over me. I could have a fire on that real estate, and it could ruin my suit. But if I put it in a nice little cup, then no matter what happens, that coffee could be 200 degrees and it wouldn't burn me. If I'm holding it in my hands, I get burned. But I also don't want someone to be able to take my coffee cup away. I want to protect, like if I do something stupid, I don't want them to take my coffee cup away. That's outside protection. Inside protection, I'm protected from the coffee. Outside protection, they can't take my cup. We put real estate in it. I'm protected from the real estate. And also, because I use Wyoming, or I'm using the strategies Clint showed, nobody even knows I have a coffee cup. They're looking at me and they're like, do you have a coffee cup? I'm not going to tell you, right? They can't take my stuff. That's all it is. You'd be shocked at how very few people are ever going to bug you if they don't know what you have. So many people over the years, we've seen so many situations where it was a child or it was just a freak accident. We had a double amputation. A valet ran a car into some patrons on behalf of a client. He had a whole bunch of weird stuff going on, and they're responsible. And because insurance companies are really good about having exceptions, they managed to exclude it out of the policy. I'm not saying don't have insurance plus an umbrella, plus have the actual protection. I want to be protected from the hot coffee, but on the same token, I don't want them to take it away. I don't want to rely just on insurance. In other words, I don't want just the insurance for fixing when I scald myself. I want to prevent getting scalded. But if I do get scalded, I still want to have the insurance, right? I still want to have the protection. I want to make sure that there's something there in the event somebody's really messing with me. But for the most part, you don't get messed with. And because of the tax situation, I'm going to show you a whole bunch of them, especially for real estate taxation. You get paid a lot of money to do this. Depending on what kind of coffee you got, you're going to get huge benefits. I'm using that as an analogy. I'm not specifically saying this is magic coffee. Somebody wrote it about Trump and Hillary. Somebody says, I'm still confused about what Toby said about traders. I will cover it. I covered in YouTube, but could you guys see? Somebody says, time for a coffee break. It is actually. We're going to take 10 minutes here. So we can all get juiced up. You guys can have your cup. This is my little Patty, my assistant, made that because I draw really horribly, and that's a bull. It was a bull market. I was predicting the bull market when it crashed. I was showing all the stats when you have a black swan event, and we were like, buy everything. So that's my bull. Going, all right. And then all my clients in the infinity stuff, they all killed it. So that's my bull going, arr. So can't see your coffee. Sorry. It's in there. Here. See yeah. That was coffee. All right, guys, let's do 10-minute break.